Up now, we have Forum Daily's market update with Catherine Murray, host of the Buck Stops Here. All yours, Catherine.
Thanks, Nima. Hello, everyone, and welcome to your weekly market recap. I'm Catherine Murray. Well, we are seeing North American equity markets somewhat mixed today, following a very nice rally yesterday on the back of Fed Chair Jerome Powell's comments, indicating that perhaps the time for moderating the pace of rate hikes could come as soon as December. That was very good news or positive news for the bulls in the market who have been believing that we have in fact seen peak inflation. In fact, we did get PCE, personal consumption expenditure, out this morning, which is the Fed's preferred measure of inflation, and it came in lower than expected. So again, more confirmation that perhaps peak inflation is in the rearview mirror. That sent markets rallying, including WTI up by about 3% yesterday, 2.9% today, on track for 7% gains. It also sent the US dollar down 1% yesterday, again down 1% today. And US Treasuries were rallying on the back of the belief that we will see rates decline, sending bond prices higher. They have an inverse relationship. Importantly as well, when we think of what's next, there is concern, even though we're seeing this nice rally in the marketplace, that the economic data has in fact slowed. And that is a concern for the bulls in the market. And obviously it dovetails nicely to the bear case within the market. We did get ISM, manufacturing ISM, which contracted. It's actually the worst number we've seen since the depths of the pandemic. So in other words, the economy is slowing. You're also seeing that within various corporate results. CRM within technology, Salesforce, they did post weaker than expected results, setting that stock down by about 9% today. Costco also came in with weaker than expected November comps. And Dollar General also posted missed numbers and lowered guidance. That stock also down by about 9% today. So in other words, good news, bad news. We've got a Federal Reserve that might slow the pace of rate hikes, which is supportive for equity markets and valuations. But at the same time, a lot of questions remain in terms of what does the economic picture look like and what do corporate earnings results look like. And we're getting both of those indicators on the slowdown side, as I just mentioned, from an economic data perspective and also corporate earnings. Having said that, we did get the Beige Book results, which tracks economic activity within the United States, and it did show that economic activity was flat to up. So again, some mixed pictures here. Away from that, holiday spending, we had the results this week from Black Friday and Cyber Monday, and it looks as though the consumer is very resilient. The results were pretty much flat to up in terms of the revenue sales numbers year over year. There is a bit of a bifurcated market, though, within retail right now. You are seeing the high end continue to perform quite well, but you are also seeing the trade down effect. So people have been affected by inflation and are trading down in terms of going to some of the more lower income oriented retail stores like the dollar stores, despite the fact that I just indicated that the Dollar General did miss and lowered guidance. Now, away from that, as we look at the TSX, it is moving higher today to the tune of 0.8%. We did see a nice rally yesterday as well. We rounded out the Canadian banks reporting their recent results with a bit of a mixed picture, although all three did raise their dividends. TD did beat expectations quite nicely, setting that stock up by over 2% today. They raised their dividend by over 7%. BMO and CIBC had slightly disappointing results, but both also raised their dividend to their investors and shareholders. Away from that, I just highlight another big news item here with the Canadian banks. RBC buying HSBC's Canadian bank assets. It's the largest domestic bank deal ever, over $13.1 billion, or call it $13.1 billion, which gives RBC about 130 branches and over 780,000 potential new clients. From an economic perspective here in Canada, we did get the GDP for third quarter coming in at 2.9%. That did beat expectations. But important to point out that that was really due to improvements within trade, whereas the domestic demand did decline. And just to point out one item within that, housing investment was down by about 15%. So domestic perhaps a little bit weaker. Lastly, putting all of this together in terms of what we're seeing in the United States as well as Canada, The BOC was expected by the market to raise rates by about 50 basis points next week. It seems though that might be coming down to, say, 25 basis points. We shall see next Wednesday. Nima, I'll leave it there. Back to you.
All right, thanks for that, Catherine.